Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight, the US dollar, which measures the greenback strength against a basket of 6 major currencies, rallied to a high of 107.05. This was last recorded back in 2002. With 20-year highs now, the market looks towards the euro as it tumbles further towards the bottom side of this range here around 99.5. Investors combined the minutes overnight from the US Federal Reserve's most recent interest rate policy meeting for clues about what the US Central Bank may do to tackle rising inflation. The Fed minutes offered no major surprises. However, investors are now focusing on the July meeting, as the Fed's two-day meeting last month showed that the central bank's policy makers concluded higher interest rates could be needed to restrain what they saw as a worrying trend. The policymakers also acknowledged that more rate hikes could weaken the economy. If the pattern does hold for euro, then little to be said until we reach that bottom side, which is around 99.5, and reassess from there. The Australian dollar has maintained its slight negative bias and still holds, however, above the key support level of 67.6075. We're very, very close to this level now, and we do need to see a bounce. Otherwise, we could be in store for another down test and therefore look towards the region of 66.5 as a potential target. Dollar yen recouped some of its losses. Nevertheless, I still feel from this technical pattern here that the market could actually still continue its decline and therefore look towards the region, first of all, at 134.7080, with the objective holding at 133.7090, and then most probably expect to see profit taking from there. The pound remains weak, and as we can see, it's still a little bit concerning as the support level at 119.20 slowly crumbles. If we see a close of New York tomorrow, then we could see under 119.20, then we could see a move down towards 118.1530. The trend is still relatively strong, but we are oversold. So let's see if the market can regain some momentum into this coming session. Sterling CAD did take a brief look underneath that key level, which was at 155.20, but it managed to close above there in New York this morning. In light of the pattern, I do like this divergence, and if so, could see the market eventually kick in and rise up towards 156.65 to 157.25. In light of the pattern, if this holds, then I do anticipate a recovery. As you can see, the market still maintains quite heavily but to a negative bias for gold, since the heavy tumble crushed through the level of 1,788 and now reaches its next objective, which was at 1,738. We do need to jump into a broader pattern now, because if we see a close under 1,738, little support is seen until 1,690. West Texas took another tumble overnight and crushed the level of 95, and now nearly reaching its next objective, which was at 92.60. The pattern is still quite heavy. More to the fact is, I feel stops are going off. That is, the market's quite long, and therefore we could see another challenge to this bottom side around 92.60. And if we see a break, little support is seen until somewhere around 85 to about 87 as a potential target, and reassess from there. Well, that wraps it for the morning. Thank you very much for joining me, but please join me later for the end of the day wrap, and also keep an eye out for the intraday report.